Hey, what's up, everybody? Thank you for joining me. Here is another quick episode of stuff that I've been writing here for Rogue Macro. Make sure you guys check it out, roguemacro.substack.com. Tons of fear going on in the Bitcoin space. Of course, Rogue Macro is more macro-oriented, and my other site is Bitcoin and Markets. That's more Bitcoin focused. But I think, this post gets into some of the broader macro concerns for Bitcoin right now. And so let's jump right into it. Is peak fear in Bitcoin warranted? Unprecedented times in macro and Bitcoin, downside risk limited from here and the next 6 months. All right, let's get into this. Make sure you guys subscribe, support my work. You can also support my work by just liking and sharing this video around. So Bitcoin under 100,000. I'm not here to cheerlead Bitcoin or be a permabull, even though I am a permabull at heart. I'm here to write the truth, and it's very hard out there for people, guys. This is the craziest market that I have been involved with, and I've been around Bitcoin. This would have been a fourth cycle, whether we get a cycle or not. If the bull market has even started, I don't know. But let's dive in deeper here. The truth in the Bitcoin market right now is that no one knows what to expect. So when you see those people pumping out there, Eric Trump coming out and saying, hey, we're going to 200,000. Tom Lee saying 200,000. I mean, a lot of these people saying 200,000, they don't know what to expect. We are in unprecedented times for sure, and we are going to get into that. The halving cycle is dead. That's for sure. If you're new to Bitcoin, there was this 4-year halving cycle driven off of the block reward. So every 10 minutes when a block comes out, when a block is found by the miners, you get a reward for that. In the beginning, it was 50 Bitcoins per block. Then it got cut to 25, then 12.5, and so on and so forth. So we are in an era now where we're at 3.125. And when it gets cut in half again, it's going to be so minimal. That block reward is going to be so minimal, and the quote unquote inflation rate or issuance rate for Bitcoin is going to be so minimal that it's not really going to affect the price. So at the beginning, we had this like high inflation rate with the 50 Bitcoins per block. Then we had a halving, and that inflation rate got cut in half drastically. I mean, it kicked off a deflationary spiral. And that's one reason why we saw the price shoot up. And they do correspond with the business cycle as well. But I think that at the beginning, the business cycle is more of a coincidence. The halving cycle was much more dominant at the beginning, but now that it's so small, the business cycle is the dominant thing. So you can't have both. Things can't change. But the halving cycle is dead. And in that time, people turned to the business cycle in general as a Bitcoin indicator. But that too seems dead. And I wrote about that last week. The post right before this was about the business cycle on pause. There are many calls for the top being in, and still others saying the bull market hasn't started. I'm in this latter group. So where does that put us? When I think about the halving cycle and business cycle discussion, I get bearish. I'm squarely in the camp that thinks recession comes before reflation. So recession comes before reflation. And I'm going to get into that more deeply, but just right up front here, I've been making a call for oil for probably over a year, or close to a year, that we see 50 before 90 again, because I see a recession before reflation. I don't see a recovery. That's also a special thing to point out here. I do not see a recovery in the global economy, at least for the foreseeable future. We're in this weird time of deglobalization and depopulation, deflation, and those are the overriding pressures. Now, we can never get back to a true recovery until we get our demographics back in line, until we get a new financial system. And so that is long down the road, maybe 20 years. Who knows? I mean, it'll take much longer than 20 years to get the demographics issue fixed, but at least 20 years probably to get a new financial system. Of course, it can happen a lot faster than that. Well, that's the things I'm watching. But reflation is possible. So we can kind of get back to normal in a way, right? But it's never going to be a full-blown recovery. China's growth is dead. Europe's growth is dead. U.S. growth is dead. U.S. growth is less dead because it is kind of the last market standing right now. And so the US will tend to do better. And I also talk about that in this post. So, all right, let's continue. That means PMI is headed lower before higher again. And Bitcoin, the same. This isn't certain, though. The US is unique and could escape a full-blown recession completely. Like I just said, it's kind of the last market standing. We could see a continued period where PMI is in mild contraction for another 24 months. It is already unprecedented, so nothing stops that from happening, but it's unlikely. So here we go. Here's the chart of, this goes all the way back to 1948, and look how volatile this business cycle is back here. Then all of a sudden, in the early 80s, we get the interest rates going to 15, 20%, break the back of inflation, so to speak. And then since then, secular bull market in bonds, and we've had much less volatility on the business cycle. And then right here towards the end, you can see this is very odd. We've had 33 of 35 months in contraction. It's possible that we kind of skip along here in mild contraction. That's kind of has to be your base case. Let's continue. I'm also a seasonality maximalist. I think it's super important. Super important. I do not expect to see some sort of financial crisis, say, in June. Okay, that is totally outside of the calendar bounds here. The periods of stress are not randomly distributed throughout the year. Let's go back and take a look. So the Long Depression, that's going back all the way back to 1873, that started in September. Panic of 1893, that started in May. So that's a little bit out of pattern, but it's still kind of close to April. Okay, April, May. And that's end of Q1. But that's the one that doesn't fit here. I'm just including it to show that there are exceptions, but they're few and far between. Panic of 1907, that started in October. The stock market crash, famous one, 1929, that started the Great Depression, October. Towards the end of the month, but still October. Recession and banking crisis in 1933. This was kind of the low of the Great Depression, and that started in March of 1933, end of Q1. Black Monday, October again. That's the largest single day drop, I believe, in stock market history, and that was October. Great financial crisis, Lehman, started in September of 2008. Repo Rumble, that was the first kind of crisis since Lehman, and that was September as well. And then the COVID crash, we bottomed in March. Yeah, it started in February, but we bottomed in March. The worst of the worst was in March of 2020. Now, I think this also has some other effects that we've seen since. So end of Q1 has, I think, become more important, perhaps since this COVID crash, because that kind of reset the clocks. It was a little singularity type event. And so people were synced up now more around Q1. So in 2023, we saw the banking crisis with Signature, Silicon Valley, was it First Republic? Those banks, we saw that at the end of Q1 as well. Most recently, we did see a kind of a scary spike in SOFR, and that happened at the end of Q3 there in October. Things have quieted down since then, but that was kind of scary, kind of a liquidity crunch. We had a acute dollar shortage for probably about 24 to 48 hours, and that was, again, also in October. And so that is that. So looking at these, I'm being a seasonality maximalist, I would call it, that, we're looking again at this end of Q1. So we've passed the end of Q3 now. That gives us time to the end of Q1, what's going to happen in the next 6 months. So let's continue. There are others, but these are the biggest ones, and almost all surrounded the end of Q3 or Q1. Therefore, seasonally, we should be forecasting smooth sailing until at least February or March. And that goes for the broader market as well. There should be little crunch in the repo markets. There should be little effects in liquidity in general until we get into February and March. Okay. Not just Bitcoin, but this is for macro in general. The Fed must be aware of this by now too. So they know. In 2019, Powell cut in August, September, and October. So if we go back to 2019, before COVID, he was already cutting, remember? He was cutting pre-COVID in August, September, and October. Then he did a little pause, and then emergency cuts during COVID. all the way down to zero. In 2024, they cut in September, October, and December, so last year. And this year, they've cut in September, October. So if you look at the previous 3 instances of cutting, if we include 2024 and 2025 as different instances of cutting because they were separated by 9 months, we can see that they all were around the end of Q3. Very interesting. Very, very interesting. I think they know what's going on. All right. That being said, yields aren't telling us much right now. They are behaving themselves very well. The curve itself is relatively flat. This is arguable, but that's what I would say. It's relatively flat compared to recent years, meaning yields are somewhat in the right order from bottom to top, and the spread is narrow. So bottom to top, meaning that the short-term yields should be under the long-term yields. So when we look at this, the 2-year is below the 10-year. That is the proper order. It's not inverted. The 3-month is also below the 10-year. That's not inverted. But the 3-month is over the 2-year. That is inverted. But it's somewhat close. Okay, if you look back here on the left-hand side, the 3-month is in black. The 2-year is in this purple color. And look at that gap. Look at that spread. Not only are the 2 and 10 inverted, but there's a massive spread and inversion between the 3-month and the 2-year. So right now, we've had these 3 cuts. Yields are behaving themselves somewhat. That's why I say it's hard to get a clear signal of what they're telling us right now. This means they are okay, but not healthy. I hope that makes sense. Reflation is nowhere to be seen right now. So reflation, recovery, not recovery, but what most people would think of as recovery is really reflation. And what that would look like is the 2-year being above the 3-month and the curve being nicely sloped, everything looking good, maybe even the spreads starting to increase with the 10-year going higher and the 2-year being kind of lackadaisical. So there's the spread is increasing, the yields are in the right order. That's what reflation looks like. And right now we don't see anything like that. Okay. So that's what the yields are telling us. But things look generally stable from a sick person perspective. So yeah, the economy's sick, but it looks to be doing okay. It's up and walking around. If the FOMC were today, I'd conclude that no cut was imminent. Remember, these things wag the Fed, not the other way around. But we still have 3 to 4 weeks until December 10th meeting. This is the market in which Bitcoin finds itself. It's chugging along, but in muddy waters. Things remain highly uncertain, and you shouldn't believe anyone who tells you differently. My order of most likely medium-term outcomes from applying my macro thesis to the situation are as follows. First, we continue as we have been for the past 2 to 3 years, or perhaps 2 more years. So again, if we go back to the PMI, this has been like a 3-year stint really since 2020, end of 2022 to today. Then we just continue for 2 more years doing this exact same kind of mild contraction. Okay. Where were we? So that's the first thing. That's the base case. That seems hard to imagine, but must be our most likely base case. The global economy is decoupling. Wars and revolutions are spreading. Demographics are starting to bite in countries like South Korea, Japan, Italy, Germany, and very recently in China. And lastly, the credit-based system is stuck. If we have demographics going on, fewer people, less credit. That's not good for the system. The credit-based system must grow. All right. In this scenario, Bitcoin can have strong rallies, as we've seen last year. Bitcoin will probably continue to advance in a similar manner as in 2024 and 2025. So even in this base case, 2 more years of mild contraction, Bitcoin can still have strong rallies. That's what I'm saying. Okay. Second most likely possibility is a deeper recession starting in Q2 of next year. So all the way out to March, April next year. PMI can dip harder and Bitcoin along with it. So PMI here, this continues in mild contraction until we get into like March timeframe, and then it dips further down, and that would pull Bitcoin down as well. Well, Bitcoin would fall at the same time. It's not like causal. Until then, Bitcoin could make a significant move higher, but trap everyone around a 150 top. So if Bitcoin does do this strong rally similar to the last couple of years, and say we get up to 150 in 6 months from now, looks like everything's expanding. Oh, all of a sudden recession hits, and people are trapped around that 150 mark, and we squeeze a lot of longs, okay, going down. That would mean 150 is a potential top in 2026. Third, and least likely at this time, is a market recovery and reflation. If all the investments into the US, it is possible though, okay? And I'm going to detail out how this is possible. If all of the investments into the US we've seen this year start to stimulate the economy and the government starts running down the Treasury General's account's $1 trillion balance, we might get a significant boost into midterms next year. So all the way into the end of next year, November next year, we could see a boost if they're spending down the TGA. And, like Qatar has promised 500 billion, the UAE, we have South Korea, other countries have promised these big investments in the United States. Plus we have the tariffs, we have regular investments from regular companies into the United States and into US infrastructure and US manufacturing. If those things really take off and start stimulating the economy, it's possible that we get a boost into the midterms and we sail past Q1. Okay, this is a scenario where Bitcoin bull market hasn't even started. In that scenario, Bitcoin is going much higher. If we get these events in Bitcoin and Bitcoin begins to surge, we have honestly look at 200 to 250 as a target in 2026. So bottom range 150, top range 250 for 2026, maybe even higher. Fear and greed. Now we're getting into some specifics about Bitcoin. The Bitcoin market is in extreme fear. It is the worst it has been in the last 3 years. This is a blood in the streets type situation. Down to 14, you can see. If we look at the history of this, all the way down here in the corner, this is pretty much as low as it has been. And it is terrible out there. There has not been a better time to buy the entire cycle. We are deep in the buy zone. While price can continue lower, the downside risk is very low relative to any other time in the last 3 years. So downside risk is what we're looking at. Once we're already here, it can go lower, but it's less likely to go lower than when you're up here in the sell zone, right? Okay, death cross. I wrote about the death cross last time. In that post, I said that price tends to rally into the cross. I've been saying that for years and years, and it's true, but perhaps not to the day. Within a week or so of trading, you will typically see price move toward the cross, especially if it's far away from it. So if there's a large spread. Point, a valued member of our Telegram channel, corrected me that the death cross has marked bottoms, not necessarily rallies, and he's right. So you can see back here, the death cross was really close to the sell-off and the bottom, but then it rallied. But I wanted to point out that this spike, there is a spike into the 50-day moving average right here, and it did rally after the cross. It did rally. So it's not like the death cross it implied impending doom. The death cross implied a bottom. That's what I've been saying for years. So he's right, and I think I'm right too. So we're both right. That being the case, it gives me hope we can bounce strongly by the end of the week. RSI is also tapping oversold today, the first time since early March. We might form a bullish divergence, which would take price lower still in the near future, but with a higher RSI. Again, both these metrics show that downside risk is particularly low at this point. So you can see the RSI being oversold. That typically doesn't happen in Bitcoin. I mean, it happens a couple times a year. All right. And that is what we're seeing here. And so we could get a little bit lower. Like if you see back here, when it did break oversold, it had a little bit lower to go, but it was pretty much done with going down. And then Bitcoin could rally again. So we could expect something like that, maybe a little bit lower into the high 80s. But, being oversold is a big signal here. Downside risk is more limited. Liquidity levels. Starting with a zoomed out liquidity chart, we can see price found a level of ancient liquidity from April. If we could zoom out more on this chart, I think there is also some liquidity down at 70,000, but it is highly unlikely that we get there. So you can see this kind of brighter band right here formed in April, and it went all the way out here and we just tapped it. So that is a bright band that stands out that we went down and grabbed. These are orders, okay? These are liquidation zones. So that is where sellers or buyers have liquidity in the market. Going up, that means that buyers have liquidity there. And when it's going down, it means sellers have liquidity there. So that is what we're looking at. Zooming in a little more to a 1 month look, you can see the level up to 112K becoming significant as well. some just above the current price action. So, of course, this bright level here, and there's some building up right above the price action, around 98,000 or so. To get a better view of that zone just above the current price, we zoom in more. You can see that zone in the upper 90s. So this zone right here, that's calling for the people to come, the traders to come, and market makers to come and blow people up. All right, conclusion. I want to conclude for the day by writing about my forecast. I was asked by Dave S. for a formatted update. So in the past, in these premium tier writings and coverage of macro and Bitcoin, in the past I was doing near-term, medium-term, and long-term forecasts. So near-term is like 2 weeks, medium-term is like 6 months, and long-term is like 1 to 2 years. Okay, I went away from that, I don't know, maybe a year ago. And because the cycle was starting to not make sense, and so it was much harder to make like long-term forecasts based off the cycle. And like I said, the cycle is dead, and so that's why that happened. Our current market is unprecedented in modern times. Of course, if we go back far enough, we'll find some corollary, but the statistics and the metrics aren't complete back then, right? So right now, we're in unprecedented times, at least since the last fourth turning, as seen in the PMI. So the PMI goes back to 1948. Last fourth turning was roughly World War II. And so PMI starts after that, and it covers this whole series of turnings: first, second, third, and now the fourth turning. And if you guys don't know what the fourth turning is, check out the book, The Fourth Turning. Talks about the generational cycles. So within the last 4 generational cycles, the fourth being the last of them, these is unprecedented times. So we can look at PMI, we can look at copper to gold ratio, which we've done in the past. The Bitcoin cycle is now different, and on and on. That makes forecasting extremely difficult. This forces analysts worth their salt to fall back on their general market theories, which is what I have done above. They come in a few general schools of thought. So these are the general schools of thought of analysts. 1, inflationistas. They see inflation everywhere. Everything is about inflation, inflation, inflation. The interest rates are about to skyrocket. CPI is about to go ballistic. Everything is inflation, inflation, inflation. Of course, that's wrong. Overriding deflationary pressure is what we are worried about, hyperdeflation. Number 2, anti-US, pro-China. So of course there's the Thucydides trap. There's a bunch of the bought and paid for China sycophants out there. People tend to be anti-US. Everything's broken. Everything needs to change. Accelerationism, which I'm kind of in favor of some forms of accelerationism, but there are these people that China can do nothing wrong. They're winning. They're always going to win. It's not debatable because the U.S. is an evil empire. So those are the type of people I'm talking about here. AI maxis, they think AI is going to revolutionize the world, and everything we do must be centered around thinking about AI, and you can lump quantum computers in there as well. Of course, I'm not in that camp at all. I think economics is going to make AI much less impactful. Number 4, monetary deflationists in Eurodollar. That's people like Jeff Schneider. I would put Brett Johnson in this group. They are more academic and more correct, but they don't see the evolutionary nature of what's going on here and the fourth turning, right? So in a fourth turning, it's obvious that things are going to change into the new era, okay, the new paradigm. It's going to evolve. The market structure is going to evolve. The international scene, international geopolitics are going to evolve into something new, a new paradigm. Jeff Schneider does not see that. He just sees a problem with elasticity, and we need to solve elasticity, and that's I don't get down with that. And lastly, number 5, I say holistic evolutionary camp, and that's my school of thought, and that's where I am right here. It is my current contention that this weird market is due to deglobalization and deflationary effects. That is part of my macro thesis. I expect this weird market to continue for years to come, punctuated by periods of reflation and crisis. Baseline is therefore continuation. Now, if we go back up to PMI, I'll just show you that. Of course, I mentioned it already, but the baseline is continuation of mild contraction. And over the next period of time, like we could probably close off this red box right, where this very odd period starts. And we're going to see longer periods of mild contraction with some reflation and some crises. But in general, it's going to be tighter. It's going to be more averaged out to a mild contraction going forward. That's what I'm saying. All right. With different likelihoods for reflation or a recession trade, where does this leave Bitcoin? Bitcoin has done very well during this period. PMI started its historic contraction period back near the FTX collapse in November of 2022. So PMI started this weird, odd behavior back in November 2022, right at the FTX collapse. Well, since then, Bitcoin is up 450%. So Bitcoin can continue higher under mild contraction conditions, and that is the base case, guys. However, acute dollar stress and financial crises will be bearish for Bitcoin. In that scenario, we could see a total of 50% plus or minus correction. I don't think we're going to see 80%. It's going to be around 50 from the top. If we see reflation, however, due to things I've listed above, like the TGA and investment in the United States, we could easily see a rally in the next 6 months up to 250K. Now, the specific forecast, near term. We are likely near a bottom for this move in Bitcoin. Over the next 2 weeks, I think price will be challenging 110 again. Medium term, baseline and reflation scenarios are bullish. So out of the 3 scenarios, we have baseline, reflation, and recession, remember? So baseline and reflation are bullish. But that being the case, you have 2/3 here, at least, baseline and reflation, that are bullish. So in the medium term, we have to be bullish on Bitcoin. But the majority forecast is therefore bullish, like I said. I put the recession scenario at a low likelihood until March. So especially in the next 6 months, there's a low likelihood. These next few months could be anywhere from mildly bullish, like reaching 130 by March, or very bullish, like reaching 200K by March. So this medium term by March, 130 to 200. Long-term forecasts today must consider the revolution we are living through right now. And that is what I'm talking about back here with the holistic evolutionary camp, these different types of people. What these people have to think about the actual structure, the paradigm shift that's going on right now. We have moved into a new paradigm. Bitcoin has the ETFs, they have MSTR, and central banks are buying Bitcoin, and sovereign wealth funds are buying Bitcoin and mining Bitcoin. The UAE is mining Bitcoin. Qatar is buying Bitcoin. Major global powers have accepted it. Therefore, $1 million Bitcoin is likely someday. For our purposes here, I'll consider end of year 2027 as the long term. So that's looking 2 years out. The problem with this time frame, however, is the recession scenario becomes the greatest likelihood. So medium term recession is low likelihood in the next 6 months. But once we go out 2 years, it now becomes the greatest likelihood. And so that's bearish for Bitcoin. See why it's hard to forecast this? My cautious forecast is therefore 250 next year and perhaps 300 in 2027. After the recession, so here, since the recession is the greatest likelihood within 2 years, after that recession, and assuming a reflation period, which is not guaranteed, a triple into 2023 is reasonable, taking us near $1 million. So I'm calling $1 million by 2030. That's just one more zero. Bitcoin has already added 5 zeros. It can add another 0 within 5 years. I don't think that's too bold-hearted, especially if we say by 2027, 300K, and then 3 more years, triple. I think that's fine. It might be stretching it, but it's not completely out of the realm of possibility. All right, so that is my post. Guys, make sure you will get access to writings like this if you join the Substacks, roguemacro.substack.com. It does cost money, but it is very affordable, especially if you're into this type of thing and you're an investor and stuff. Some people charge hundreds of dollars a month. I'm only charging $15 a month. And I think you get high signal for what I do put out. So appreciate it very much for joining me, guys. Make sure you like and subscribe. Follow me on Twitter, roguemacro_, and also at Ansel Lindner. Let's see what else. And if you want to, check out bitcoinandmarkets.com. All right. See you on the next one. Bye.